Good evening, everyone. This is Wayne, and this is the video version of the trade report for Thursday, May 3rd, 2018. Well, the markets looked like they were just going to fall and keep on falling, but looks like the plunge protection team is back at it again, and the recovery that took place today was remarkable. Stay tuned to find out more. Greetings, everyone, and thank you once again for spending part of your day with me as I go over the action and activity in the financial markets. And we did have a lot of action and activity today in the financial markets. As per my trade report from yesterday and my statement that I am looking for lower prices, we did get lower prices. In fact, we got a test of the 200-day moving average on the S&P 500. In fact, it went quite a bit below the 200-day moving average, and I'll show you a chart of that shortly. But I don't know why yet. I honestly don't have a clue why we went higher. But it could just be computer-driven trading models, the algorithms associated with price hitting the 200-day moving average. That has happened twice before. This is now the third time this has happened where price has basically jumped off of the 200-day moving average. And we went higher and basically stayed higher into the close. Now, when I say higher, I mean off of the lows. The averages, let's just go over those real quick. The Dow closed up 5 points. The NASDAQ closed down 12 3/4 points. The the S&P closed down 6 points, and the Russell 2000 closed down about 8 1/4 points. So the only index that closed higher was the Dow, closed up 5 points, and at one point in time during the day today, the Dow was down almost 400 points. So again, a very raucous day. Now, I call a day like today, prior to the day opening for trading, a tween day. We had the Fed meeting yesterday, and we have a job number tomorrow. So two very significant economic components of information that are there for the market to consume and interpret and ultimately trade off of. So a very, very big trading range today for a tween day especially. Now tomorrow morning at 5:30 a.m. Pacific Daylight Time, we do have that job number, and that job number, I have no doubt, will make this market move. I don't know which direction it's going to make it move in, but I think it's probably going to end up being a day potentially as big of a mover of a day as today was. So, and I would have almost expected today to be tomorrow as it relates to the price action. Okay, that was a little bizarre. All right, so every index basically started the day off to the downside. Even the Russell, which has been the strongest of the indexes in this several day downtrend that we've had. And then every one of them caught a bid and then went flat into the close. The Dow, which is, of course, the index that's tracked most closely by CNBC and the financial networks, just because it's the Dow 30. Everyone knows what you're talking about when you say the Dow. Yeah, that's the stock market. Well, actually, the S&P 500 is more representative of the stock market overall than the Dow is. The Dow is only 30 stocks. The S&P 500 is 500 stocks. So at any rate, and as I am doing this trade report here, we just got a buy signal on the S&P futures, and I'm looking at the other indexes, and we just got one on the Russell 2000 too. So the markets look like they want to go higher, and they appear to be poised to do just that. Whether or not they are able to, or find the predilection within the context of where they are after today's trading session and what ultimately is released tomorrow morning as it relates to the job number will be, will be the definitive statement on what happens with this market. Right now, I mean, I'm positioned what I would say fortuitously for everything that happened today. I was short predominantly. If you're a regular listener of the trade report, you know that my portfolio was positioned predominantly for the downside. Excuse me, going into today's session, and I wasn't disappointed. All the averages just kind of collapsed. And then when I saw the recovery coming, and we also, this is why I use indicators, we got a buy signal right here. I mean, that was my clue that this market was potentially going to go sideways and maybe higher. Little did I know it was just going to take off to the upside. So be that as it may, that's what it is, what it was. And I exited some of my short positions, and I'm not net long now. I'm kind of net neutral, but I have myself repositioned for a market that will actually be benefited by going either higher or lower to a certain degree. If it explodes higher or lower, then I'm going to have to do some recalcing on my portfolio positions. But for now, things are looking real good. Let's take a real quick look at the S&P. Oh, that wasn't what I wanted to do. Come on. Try that again. There we go. And I will need to drag this chart over. So this is a chart of the S&P 500. Let me take this and bring it up here just a little bit. Okay, so today's price action, we had a low here. This is the 200-day moving average. So you can see that the low of the day was significantly lower than the 200-day moving average. But like I said, inexplicably, we began to get bought. And that typically is the purview of algorithms and or computer-driven trading models. You can see the same thing happened back in February when we hit the February lows. We went below the 200-day moving average and we popped back up, and we actually kept going higher. And everyone thought it was going to be over, but then, of course, we tested it again, and we closed above it. And right here was the first time that we actually closed below the 200-day moving average. And everybody thought that was going to be the beginning of some very significant downside. Well, what that basically did was provide the impetus for a little bit of a move up, then a little bit of a move down, and then kind of this sideways action over the last, about week and a half of trading. And today, again, first time since April 2nd, so a month ago, that we actually dropped down under the 200-day moving average, but bounced back up again. So if we look at this, I believe was February 6th. Let's take a look at the date on this real quick. No, it's February 9th. So this was February 9th. This was April 2nd. And that really, and then we had, subsequent trading sessions on the 3rd and the 4th. And actually on the 6th, that all tried to push the market lower than the 200-day moving average unsuccessfully. And we ended up going a little bit higher. But now we're trying to go down again. Didn't quite get a test of the 200-day moving average back on April 25th, about 2 weeks ago. We tried to go higher and then started falling again. And the energy of the market really changed here. There was this very bearish dynamic that kind of entered the market, this kind of, wow, what's going on here? And then today, we just went wham to the downside and recovered. Now, this candlestick pattern is known as a doji, and a doji means indecision. As far as I'm concerned, this is actually very bullish. It's still bullish within the context of a very, I don't want to say a bearish market because it's not bearish. It's a bullish candle within the context of a market that still has a lot of downside pressure associated with it. And if we get a neutral job number tomorrow, we could actually go higher. But if we get a job number that's higher than what the expectation is or lower than what the expectation is, I think this market is going to return to this below the 200-day moving average area. Again, I am making no speculative predictions or guesses or anything right here. I honestly don't know what the market's going to do tomorrow. And I called for this down move today, but the fact that it had that recovery was a little bit unexpected, and it tells me that there's still, well, we kind of make fun of this, but we call it the PPT, which is an acronym for the Plunge Protection Team. Basically, when the market falls below a technical level or looks like it has a little bit more undue downside pressure on it, there's a contingent of, individuals, computers, algorithms, entities, if you will, that come in and basically buy the market back up again. So, I think that's what happened today. But that doesn't tell me what's going to happen tomorrow. And again, the job number is going to be what everyone is waiting for. And that happens, that number's released at 5:30 a.m. Pacific Daylight Time. Let's take a look at the VIX here real quick. There's really no individual stocks I want to look at today. It really was all about the broader market today. Tesla had their earnings last night, and I guess they had this very strange, Elon Musk had this extremely bizarre conference call, and that's what a lot of the analysts, yes, but a lot of the news talking heads were discussing today was how strange that was. So if we take a look at the VIX here, as we always do, we can see how it's kind of the inverse of that candle that I was showing you, that doji on the S&P. It went higher and then it came way back down again. And the VIX actually closed lower today. It closed 7 cents lower at 1590. It was up over 18 at one time during the day. In fact, if we take a look, we were almost at 19. We were at 1866. And we closed at 1590. This is very interesting to me because the last time that we were down this low, so the 1866 print came in. We had a couple of those early back on April 25th. So that was one of the days that I was showing you where we tried to test the 200-day. So volatility is really getting used to this price level. It's like between 2,600 and 2,700 on the S&P 500. Now, yes, we went below 2,600 today, but the fact that we bounced up and closed at get that price level here. We closed at 2629.73. That's quite a recovery off of those lows, especially given the fact that we breached that 200-day moving average. So again, I'm just reporting what I observed, the energy that I'm perceiving in this market, what I'm looking at, and how I am kind of establishing I don't know what to call it, a kind of a protocol, I guess, for how I'm setting up my portfolio. You look at these market conditions and you can't help but have some positions on that not only benefit from the downside, but protect your long positions in your portfolio. But then you look at the VIX and it's like this market's, it looks like it's primed to go higher. So there's a couple of different competing dynamics at play here. And again, we won't know what happens until it happens. And today, given the fact that we had a collapse and then a total recovery, almost total recovery, gives me cause to think that this market still has enough life left in it to begin fighting the good fight and go higher. We'll see. Again, it's all about the job number tomorrow. So I'm going to keep this video a little bit short, and basically ask you to please trade safe. Trade what you see if you choose to trade at all. Good night and good trading.